And we are live. Welcome back. Actually, I should go to the other camera. Welcome back to Stock Tricks with Nick. This is the second week of our live stream after the markets close on Fridays. If you can't make the live stream right now, once I finish here, it'll be uploaded onto YouTube, so you can go through the video then. About an hour or so afterwards, I'll go through and timestamp each of the stocks that we talk about. So if you only are interested in a couple, you can go directly to those spots, check out the technical analysis, and go to the next stock, just to save you some time. With that being said, today I want to look at the past trades that I made this week that got me $656, so not a huge week. I was actually a little bit in the red going into today, but today was a really good day for a lot of my stocks, and I'll cover which of those broke out. Outside of the stocks that I've already traded, I do want to cover some of the mistakes that I made. If I'm not going to be covering mistakes and only showing you guys the good stuff, this isn't going to be an honest show, and you're not going to learn the things that you need to learn to improve trading. And if I'm always lying about the stocks or the trades that I'm making, then I'm not actually going to improve either. So it's tough to look yourself in the mirror and see, hey, these are the mistakes you made. But if you don't do that, you won't improve. And I'm here to improve and make money. So I'll be doing that as well. Let's see. Outside of that, we'll also be going over my stock watch list. So the stocks that I'm looking forward to trading next week, both on the short side and the long side. So typically I trade long most of the time. The market's getting a little bit top heavy here, so I have started some short positions to kind of give my portfolio some balance, but we'll go through that in a little bit. Outside of the technical analysis side, I wanted to talk about why position size matters and why you should have a consistent strategy of either starting with the same position size and leveraging up into a trade when the stock's doing well for you, or starting at your max size and then quickly scaling out when it's either working really poorly or if you want to take profits off the table. All right, with that being said, also use the comment section to let me know any stock tickers that you want me to review. I'll be keeping an eye on that throughout this stream, and with that being said, let's get to it. All right, give me 1 second just to pull the chat over so I can see that while I'm streaming. And while I'm doing that, this banner in the bottom part of this will tell you what each of these metrics are looking at. So let me zoom into the 3 month because it's a little bit easier to see there. But the blue bands around the stock are called Bollinger Bands. All that is the 20-day simple moving average. So the ending price for the last 20 days on average is this green line in the middle here. And then the Bollinger Bands, the two blue lines around it, are 2 standard deviations away from the green line. So when there's a lot of volatility, those lines expand. And when the stock starts trading in a narrow range, those will contract. The yellow line we have here is the 200-day simple moving average. Red line is the 50-day simple moving average. Green is the 20 we already talked about. And something that I use a lot in trading, helps to find some support and also set my stops, is this 8-day exponential moving average. So that's a lot shorter than the other ones that I mentioned, and I use that more often because I'm a shorter term trader, but I do find that all of these simple moving averages help me trading. On the bottom we have volume here, and then we also have the 50-day average. So we can see, is this typical volume we're seeing in this move up? Is it a little bit less? I'll get into a couple situations where that's a good thing to note. All right. TSN, all right. Let's get started here. So if you guys watched the market this week, there was a lot of different stocks that were popping out of bases, 6, 10, 15%. So I wanted to cover the buildup to the breakout in a couple of those, and once the stock's already broken out, what you should be looking for in either weakness or strength. So one stock that I was lucky enough to be in before the breakout was Adobe here. So let me zoom out to show more of the picture. Cannot see the symbol on the chart. Okay. I'll try and fix that for next time, but right now we're looking at Adobe. So it's a great setup. If you read Mark Minervini's book, he calls it the VCP, the volatility contraction pattern. What that says is when a stock's on a nice run up and then starts to hit some resistance, and then we'll zoom in here, it will go through a pattern of contractions where it might drop down. So let me change this to measure. So it'll drop down, find some support, and pop up, but it might not make it all the way and start making a new high. So what I'm looking for is it'll pull down, and that's an 11% dip, and then jump up a little bit. And then each consecutive pullback, I'm looking for less magnitude and also the volume to be drying up. So what that tells me is all the traders who are happy with this massive run up are starting to take profits here, right? But as time goes by, sorry about that, as time goes by, more and more traders that are still in the stock got in at later points, and they don't want to be selling for a loss in these dips. So there's less and less sellers in the market at this time. So we see contraction, little pop up, contraction, little pop up, contraction, little pop up. And I actually got into the stock right around the high of, let's see what price that was. It was around 460, maybe a little bit higher, 465 or so, when the stock moved over the high of the highest point in the contractions. So I got in on, actually it was this day. Got in on this day. You can see that let me move my stop. You can see that the stock kept on pushing up against the 8-day moving average. That held support as it got pushed up. We got a pop up here, and you can see volume started to tick up while this moved higher. So that's showing me that there is some big buyers in the market at this point. So got in, moved up a little bit, moved sideways. I added a little bit more to my position because it held at the top part of the candle in the mini breakout. Move sideways, let the 8-day exponential moving average come back up, provide a little bit of support, and then look at this volume day. This shows you that, okay, we broke back up, we're now at all-time highs, and the volume's coming in. And of course, the next day we get that gap and push way, way higher on massive volume. So on this trade, I'm up big now. I did cut a little bit towards the end of the day. That's something I like to do just to lock in profits, and then I can reassess whether I want to add that money back in or if it was smart for me to lock in profits on the pop. So I sold, I think about a third or a quarter of my positions here. And then what I'm looking for after these pops are tight consolidations with decreasing volume. So again, similar to the initial run up, that tells me that there are short-term traders that are going to take their profits, myself included, but I don't want too many people taking their profits because I want this move to be strong. Otherwise, I should take all my profits, get out while I can. And that's what we saw here. We saw a inside day, so the lows and the highs were both encapsulated in that larger candle. We got a second inside day today, and look here at the bottom how volume's shrinking and shrinking. So that tells me this stock's not done yet. I think we're going to see another pop back up. So still holding a position here, and I'll be adding with the break over Friday's high. So the high of the day was 518.80. Maybe I get a little bit more conservative, wait till 523 to really show strength in the market, but That was so far a great trade, and it all stemmed from this volatility contraction pattern here while the volume's shrinking and the pullbacks are getting less and less. So let's jump to another one of those, which would be is it Netflix? Yeah, Netflix. Here we go. Netflix had, I'll zoom out again, obviously massive run up since the virus. And we did have this strong pullback. So that was a little bit around 18%, 20% pullback. I did try to trade in a little bit too early here. I basically scratched that trade for maybe a 1% loss on average, maybe flat. Unfortunately, I did miss the pop on, that would be Wednesday, but similar story. We get 18% pullback, and then from the high off the rebound to the low, that's 7-8%. You see volume shrinking, shrinking, shrinking. Find some support. And here, it's the 50-day simple moving average. And then this starts to consolidate. Look at how tiny the volume gets just before things start picking up and the stock really starts finding a little bit of volatility to it. And then you can draw your lines however you'd like, but I always try to go from the top of the previous peak to the current one, and then a buy order would be placed when you break above that line. So you probably would have gotten in on this red day when the candle broke over the top of that, but it's still a good buy. And then if you didn't get in there, you'd have the next 2 days to start getting in. But we saw that consolidation, we saw volume lightening up, and then boom, that broke up. And then the following 2 days, because I missed this trade, I'm still keeping this on my watch list, but I missed the break. So I'm not gonna chase the money because I'm always trying to get a safe entry point where I can put a stop loss between 6 to 8% under some simple moving averages. So if there is a pullback, they'll wipe out different traders that really put their stops exactly at those moving averages. And if I can't set a trade up with a safe stop loss, I'm not going to set it up. There's always going to be good positions to get into. It's better to hold on. So this move I missed, popped up. I'm looking for tight consolidation on decreasing volume. That's exactly what we're seeing with Netflix. And to move a stock that heavy, that's so large like Netflix, a lot of money had to come into here. So typically with a move like this, the stock isn't done moving. It's not going to sell off all the way. I will be looking to enter if we start moving back up, maybe over this first red candle. So I am seeing all the comments. I'll get to those stocks at the end during the Q&A session, but keep commenting what you'd like to see. Thanks. All right, another one. I think we talked about this last week, but Target. So really quick here. Same VCP volatility contraction pattern. Pullback after a run up. Pullback, pullback, pullback. Volume shrinking, shrinking, shrinking. And then if you just bought at the high of the base, you would get in, let's see, around this candle at 126. You would have had enough cushion in the run up to hold for earnings. Earnings pop up. And then this is where I'm looking. So I want this, because there's a gap up too, it gets a little bit trickier to trade. It could be a gap and go if it holds some strength. And Target just traded sideways as volume contracted. And now look at how the 8-day exponential moving average is running up. And the low of today actually touched exactly on that point, found the support, bumped up a little bit. On Thursday, it almost got to that area, probably feeling some short-term traders coming in for support there. So again, if we see a break over this downtrend that I just wrote on there with some volume, this could be a continuation. All right, let me cross off some names. Adobe, Roku. Roku's actually a perfect example of what I'm looking for in these stocks that pop, consolidate. So Roku right here, pulled back, popped up. Nice high red candle on much lower volume, and then we had follow through. So again, not a trade that I took. You're not going to be able to take every trade, but you can always look at the patterns afterwards, so you get those in your mind, and then you can apply them to the next trade, the next setup when they come. All right, with Roku, Netflix. One stock that we talked about last week that I saw, again, trained my mind to look for those patterns was JD. So again, we get that consolidation pattern before earnings, but you're not going to never hold through earnings if you don't have a 10% or so cushion. Earnings are always a coin flip. If you're a short-term trader, it's just not a risk that you want to take. That's my personal strategy. I will never hold through earnings unless I have a 10% cushion. And with the run-up to earnings for JD, there wasn't enough movement to really get anything in. But you see on this earnings day, it gapped up here, and then let me zoom in. So move my mouse. You can see the long lower wick that covers the low of the day. It went down, knocked out some stops at the 8-day, touched the 20-day simple moving average, and then started picking up steam. And from that point on, you see high volume each of these days, which means there's a ton of buyers coming in, and the high closes or close near the high of the day outside of the upper Bollinger Bands really shows the strength of the stock. So again, once this stock made its move without me, I'm looking for a pullback. I'm not looking to chase here, but I am looking at the stock so I can apply the same type of trade next time I see it. So yeah, this has been running up. A couple days of consolidation here, 8-day exponential moving average coming up, possibly going to provide some support. We'll see how that plays out. But its twin that happened this week was Peloton. So Peloton's been an absolute monster since gyms are not open. So you're always looking to trade in the trend. Trading against the trend is very tough. Why would you not use any advantage that you have when you're trying to make money? So I always trade with the trend. That's something that I look at. But here we see that same consolidation pattern. We get a dip, and then a little sideways movement as volume is light, and man, really light coming through here. And then on Thursday, we see a gap open. So red candles, the high part of the red candle of the box means where it opens. The low part of the box is where the stock actually closed the day at. So we opened much higher than the previous day. Let's see here. So 7%, 8% up. So I'm thinking, okay, I missed the trade. This is going to gap up. What I should have been doing was watching this for the same type of pattern that happened with JD, because that's exactly what happened here. It pulled back, touched off that converging area of both the 20-day simple moving average, that green line, and the 8-day exponential moving average. So that's two types of traders. It could be the really short-term traders with the 8-day or the medium traders with the 20-day. The more types of traders that you can get at the same point, you're going to find support there. So, and that's exactly what happened here. It bounced up and landed basically right in this congestion zone. But look at this volume. A lot of people poured into this stock. So I was not surprised today when it opened and same type of volume came and bought right back up. All right. A couple stocks that have been doing not as strong as the leaders, but are starting to pop is Starbucks and Shake Shack. So Starbucks here just got over its 200-day simple moving average, this yellow line. So again, now we're talking about long-term traders who are trading around the 200-day, longer term. The more types of traders that you can stack in your favor, the better your support lines are going to be, the better the buying opportunities will be once you break through those from the underside. So we had one attempt to break over, immediately got pressed down. Second attempt got pressed down. But the pullback from this point to the low, 15%. The pullback from this point to the low, that's 4%. It's looking good here. volume's lightening up, and then same thing, we get a touch of the 20-day simple moving average, close above the 8, and I'm thinking, all right, if this moves above the 200-day simple moving average, that's going to trigger a lot of longer-term traders who see the same kind of pattern. Sure enough, tons of volume came in with this gap and go. So this had that one red flag day, super high, super tight, low volume, and then just boom, it's going. Again, this one didn't have me in it, but you keep training yourself. Same thing with, what I say, Shake Shack. This one has been even more of a monster move. I use that to just... so a couple pullbacks here, broke over the 200-day simple moving average, got that volume on the same day that it broke over. So that's not a coincidence. Once you break over that type of moving average, that long-term trend that a lot of traders are looking for, you're going to get volume. And with volume, you're going to get large movements in the stock, either up or down. So because this was on an uptrend, you're going to get a large uptrend move. All right. Let's jump to some mistakes that I made this week. And they do have to do with the, where is it? They do have to do with position sizing. So I'm lecturing you because these are mistakes that I made and I don't want you to be making the same mistakes. And if I say this out loud, it's going to be easier for me to remember not to make the same mistakes because it's painful to admit your mistakes. That's why you should always keep a trading journal as well. So if you just take a trade, take a loss, write it off, and never think about it again, you're not going to improve. But if you take the time to actually journal your mistakes, you're bringing up those bad feelings again. So when you go to make that mistake again, you're going to have that connection. So always write down your trades. Since I've been diligently journaling my trades, I've been doing much better. So first one, let's go USX. This was my biggest loser of the week and really hurt my profitability up until Friday. So I had Adobe, I had a couple other big winners, but because I took this trade and I took this trade with more of a position size than I should have, and it went against me immediately, I threw away all those profits of good, diligent trades with one mistake. So that's why it's so important not to make this mistake again. So what I was looking at coming in here was I actually drew this as a triangle. So I think, let me change this to segment. So if we're looking there, here's my pennant. I'm looking for a break over this, and this stock had been a monster. So it had run from, let's see, 233% in just 2 months. So it has a ton of potential to break out and have strength when it breaks out. And that's what made me jump to not doing my typical around my 6% of the portfolio position size, but I got in and then it started going up, just went up 2%. And I felt the need that I needed to add position to it, when instead I should have waited until the stock made a multiple of my average gain when I win. So typically my average winning trade right now is 8.5%. And that's the multiple that I should be either using to move my stop loss up to my entry point to guarantee a winning trade, or I can add position size because I think it's going to keep going, but then also move that stop loss up. So I keep the same amount of risk and I'm just basically parlaying the positive stock movement into possibly larger gains. I didn't do that. I got 1% up, 2% up, I forget what it was, got greedy, saw this chart thinking, wow, I'm gonna make 200% on this in a couple months. Immediately worked against me, immediately. It was the wrong move. So yes, it broke out of this pennant, moved up, and then the next day moved even higher. So it broke over the high of the previous day and I'm thinking like, oh, here we go. Not the case, because immediately after that, broke down, broke under the lows here, broke under the 8-day, and when I do set my stops, I try to get that 6 to 8% stop loss below my entry, but I also want to play it below any simple moving averages. So I put it well below, thinking like if it dips down, it'll come back up, find some support at that moving average. That wasn't the case. So this went from the open to, I think it like just hit off my stop, down 8%, and down 8% on a double position. So usually I start off with 6% of my portfolio in a stock. I had 12% at this point. So instead of having an 8% loss on one position size, I actually had basically a 16% single position size loss, 2 times 8. There's no reason for that. I forget where I read it, but there's 4 types of trades that you want to make. Big winners, small winners, scratches, and small losses. You should never have a large loss. That's why it's so important never to add to your losers. Only add when the stock's working in your favor. Because if you add to losers, you're just putting more and more money in something that's been proven to work against you. By cutting losses quickly and only using smaller position sizes until the stock starts working for you, you can control your losses and let your winners run. That's why when I was doing my analytics for last month, my win-loss rate, I was at 60% loss, 40% win. But because I won 3 times more money on my wins than my losses, I was able to be profitable. So over half the trades I made, I lost on. I think the previous month it was even more. It was like 75-25. But because I had that 3-to-1 win-loss ratio, I was still profitable. So always keep your losses small. Always have consistent position size until it starts working for you. Then you can move your stop up. You can take some profit off. Kind of work with that. So USX, something that completely wiped away a lot of good trades that I had. And that was not the only time I made that mistake this week. And that's why I'm trying to call it out for anyone who's watching. So let's jump to another mistake that I made, which was Workhorse. Let's see. So similar mentality here. Look at this massive move up, 800%. So I'm all excited. I'm like, all right, once it pops out of this descending triangle here, it's gonna go and we're gonna get hundreds of percent. So it broke out here. I got in at the breakout. So let me zoom back into here. Got in at the breakout, had a lot of volume there, and it kept moving up. It went up another 4% or something. So I'm thinking, all right, here we go. We're really starting to roll here. This happened on the same day as USX as well. So things were going great that day. Went to bed, woke up, next day had a huge loss. So on this one, doubled my position size. Not when I had an 8.5% gain. I had like a 4% gain. So now by adding at the top there, my gain shrinks in half to 2%. And my stop loss has to be that much more aggressive to keep the same kind of risk. That wasn't the play. I did bracket stop losses, which mean I just have stops in 2 places to kind of avoid just a short-term pullback. Didn't matter. Both of those stops got hit. This was another huge loser for me, and it was just a dumb mistake. I shouldn't be adding 2 positions until it's a proven winner and I can control that stop loss. Wasn't the case here, and I paid for that. And I had one other one that I wanted to talk about. Where is it? Yeah. Oh, so this one is a winner now, but it was bad timing when I did get in. So CALX, CALX. Today it was up 7.3% and a little bit after hours. So I am profitable in this trade right now. I think it has a ton of potential at this point, but I made the mistake of buying pre-market on a very low volume stock. So let's see here. I did adjust these as well. So let me change this back to what I was looking at when I made the chart. What was it? I think I just had this top one, but it was like, there we go. Oh no, where was it? I'm not quite sure where I drew it before, but I did make this mistake on this candle of buying pre-market when it was moving over that 8-day and 20-day simple moving average after a pullback. So I'm thinking, here we go, this is great. But pre-market, I had to buy it at plus 2%. Since the market opened, it pulled back, popped up the next day, pulled back. So by buying at the wrong time, I have to put my stop that much higher to keep the same type of risk. And by putting your stop that much higher, look at all the moving averages here that are at risk of traders pulling the stock down just to wipe out those stops. So I did put myself at real risk of getting stopped out of this before the breakout happened. And that's why it's important to really focus on safe entry positions. Otherwise, just mark the trade and watch it. But luckily enough on this one, and that'll happen sometimes, you'll make mistakes, still make money, but you need to write down, hey, this was a mistake, otherwise you're not going to learn. But pulled back, got a little bit lower volume, but again, today saved my butt on this one. Higher highs, higher lows, clean break over this point, and huge volume. I think I saw there was also institutional buying in this as well, so feeling great about this stock going into Monday. All right, let's talk some short positions. So I know it's not super popular, especially with the market going up every single day, but I did see some of the typical winners of the market, so stocks that have been doing the best since the lows, start to pull back a little bit, show some weakness there. So when that happens, I try to lighten up my portfolio, and I'll either do that by just taking positions off, cutting down position size, or what I like to do is short some stocks that are acting weaker compared to the other stocks in the market. And by doing that, I give my portfolio some buffer if there is a market pull down, because the shorts will pay, but I'll still be able to stay in some positions that I think are going to work out if the market stays stable. So the first stock that I shorted was Nanovax and NVAX, sorry. So I did this Friday, started my short position on Friday, right after the market closed on this red flag here. So we saw this pull back, and for those of you who don't know, I think this ran from $5 to $190. So obviously crazy expansion here, up 2,000%. That doesn't mean I'm against buying it. You always want to buy in an uptrend. Stocks can run way, way longer than you expect them to, Tesla. So with this, I wasn't looking to short immediately, but I did see these long, large red candles with increased volume showing, hey, people are getting out of the stock, and it's not just the short-term traders. This is a good amount of volume here. So I missed this move on the downside, but I'm watching this now. Pops back up, finds some resistance at the convergence of that 20-day simple moving average, the green line, and that 8-day exponential moving average. It does pop over that, but on very low volume, you see on the top green candle is actually the lowest volume day. So that's what that's telling me is this rally back is losing its strength. So it's nearly time to short. Next day, pulled back, made lower high, lowers lows, closed below those moving averages, and started moving sideways here. And then finally on Friday, I got enough of what I was looking for, and it once again, the high of the day tested that 8-day exponential moving average and could not hold the prices over there. So there's resistance there. Pulled back down. I shorted at the end of the day right here. And then throughout this week, I've just been taking some profits off. I think I was all the way out at some point on Tuesday. And then the second day, so I was all the way out on Tuesday. On Wednesday, I saw it was popping back up. So I was thinking, actually, this is another good short opportunity if we see some resistance. And that's exactly what we saw here. I saw the last day, the high of the day was just at that 50-day simple moving average. So I'm thinking, okay, if this can test the 50-day simple moving average and get brought back down, that's when you want to pull the trigger on the short position. And that's exactly what I did. I shorted the stock when it was up around 5.5% on the day, with much less volume because I was already, or much less position size because I'd already made the money that I wanted to out of this trade. It already served its purpose as a hedge, but I wanted to make some more money. So pulled back down. I think I sold when it was up like 1%, so I booked another 4% on that pullback. I did try to short again one more time today with an even smaller position when the stock broke under yesterday's low, because I see this little shelf here. I'm thinking if we break below that, there's this gap in the chart that we'll want to fill. So I did set up another short position and put my stop at the high of the day at that point. So when the stock moved up, pressed back over the high, I cut it for like a very small loss. And overall, this was a great short position trade that kept me in some of my other trades that ended up working out for me on Friday. Because depending on your risk tolerance, you don't want 100% of your trades long, or you don't want 100% of your portfolio long. That's not a set in stone like rule, but for me, I'm always trying to reduce risk, so that's something that I looked for. So this was a great short opportunity to balance that long versus short risk in my portfolio. Another short that I just took was Etsy. So I shorted this yesterday at the low of the previous day. So here we see a pullback from the high. It sit on the 8-day exponential moving average and then drop down, and see how the selling bars, these red days, are much higher than the green days. That's showing me that there's a lot of sellers in the market, and I'm looking to short at this time. So came back up, had one little break of the 8-day exponential moving average, and then another one the next day. And right when it broke under the previous day's low, I started shorting. Took some position off today after it was profitable and covered this first gap in the chart. When I'm shorting, I always like a chart with a lot of gaps in between some of their days, because that's where there's the least amount of resistance. So I do still have a pretty good position on here, and we'll take some off right at this 50-day simple moving average if we get there. But today made lower lows, lower highs, closed a red candle, and had increased selling volume. So still short on this one, giving my portfolio some balance. I shorted Datadog, DDOG, yesterday as well. Instantly got stopped out for half of the position when it broke over the convergence area, this 20-day simple moving average and the 8-day simple moving average, this high upper wick. It did hit one of my stops. That's fine. I want to be reducing risk when the stock's working against me. Still have half my position, and this did make a lower high, lower low, and decent selling volume. Now, you might point out, Nick, like the green candle on here is larger than the red ones. You just said you want to be looking for the opposite when you're shorting, and that's true. But look at how this candle's formed. There's a long upper wick, which means buyers came in and pulled the price up, but then there was that many more sellers to bring the stock all the way back down. And the fact that it did break over the 50-day simple moving average to maybe trigger some buy orders that people had waiting to get in over the break, is even better because now it starts trapping traders. So yeah, there is more volume on this day that was green than the previous day, but with that upper wick, there's a lot of volume caught in the selling to get back down to the base here. So this still looks bearish to me. Have a half position size on the short side. And then the final short that I have is, nope, just talked about Etsy, is Arlo Technologies. So I was actually looking at this on the long side because it did have that run up, pull back, and pop. But similarly, we see another candle here with that long upper wick. We see a little bit movement higher, but then we see huge sell-off with a volume dump. It stopped at the 20-day simple moving average, had another long upper wick to break over the 8-day exponential moving average, grabbed some traders that were waiting for the pullback, and then sold off and closed at the low of the day below that 20-day simple moving average. So I am short on this, again, because I just started it today. It's an initial position size. If it goes against me, I have so many long positions right now that overall my portfolio is still going to be making money. But I think this is a good one to take a look at on the short side. All right, let me cross out some of these guys. Arlo, Calix. All right, let me jump to the comment section. I do have a couple stocks that I want to talk about on my watch list, but we'll jump to this really quick. So I see TSN, so Tyson's Food. All right, so looking at this, zooming out to get the full picture, we're under the 200-day simple moving average, so this is being traded by more short-term traders. The long-term guys are looking to break over this, but you do see that volatility contraction pattern from the peak here to the low point, that's 20%, to the peak here to the low point, that's 5.5%, peak here to low, around that 6%. So this is, because it's not in an uptrend, I might not take this position, but this is something that you're looking for in a good breakout potential stock. You did see volume come up here while the stock was moving up, so some traders were getting in here, and we're seeing as it pulled back this last time, volume lightening up. So yeah, if I'm going to be trading this one, I'll be looking for the break over 66.30 area. Let's see if we can make a diagonal line make sense. So segment. By the way, if you guys are wondering, I'm trading on E-Trade's platform. If you want to sign up for E-Trade, there's a link in the description below. There's a different tier system for how much money they'll give you, depending on how much you deposit. But I do like their charting software. I have other brokerages as well, always have multiple brokerages, but this was a good one to start off with. And you can make your chart look exactly like mine. I do have a video way earlier on when I started the channel on how to do that. But back to the chart. So you could draw this little diagonal if you want to do a sneak buy. So that's around $66. Because it's below the 200-day simple moving average, there's so much room for it to move up that I would try and be more on the safe side and maybe set a buy order around 66.50. And always set your buy orders above where the stock is, because you want to be buying when the stock has momentum, is showing strength and moving on the upside. Never be buying when it's pulling down, because you have no idea how long it's going to be pulling down for. So that's Tyson. Good contraction pattern that I'm seeing. Volume is lowering on each of these pullbacks. Probably won't be one that I trade personally, but I can see where you're coming from. All right, NEE. Let's see here. Ooh, this is nice. All right, so yeah, zooming out to get the story, we're above the 200-day moving average, above the 50-day, just dipped under the 20 and the 8-day, but this did have a run up. Let's see how much. Around 24%, pretty solid, but then good consolidation, volume lightening up. This is something that I'm looking for. And I don't mind the pullbacks under the previous lows because, again, anyone who has their stops exactly at some low of a previous day, a previous week, right at a moving average, a commonly traded moving average, you're going to see algos take the price below that and knock out those stop losses before the stock will move up. Big money managers are looking at that as well. So I actually enjoy, or that's one of the things that I look for in a stock that has breakout potential, is knocking out those lows before moving up. So we got, maybe got that. Let's see. To be exact, 284.58. You don't have to be this exact. Yeah, and you broke under those lows. So this is a really interesting stock. I'm going to add this to my watch list. Thanks for pointing this out. And then you can draw a diagonal if you want to try and cheat buy just to get a better price. And that allows you to keep that 6, 8%, 10%, whatever your stop loss is, but that much lower to give it more wiggle room. So yeah, if this, we're talking Monday, because unless you have the stock already, you're looking to get in. So if this can move over 282 area, you can get a buy, and then let's see, put your stop under any of the lows of the previous pullbacks. So it's not exactly flat there, but yeah, you can really put a relatively safe stop in here. But again, wait for the breakout, wait to get that momentum in your favor. But great stock, definitely adding this to my watch list. Thanks for pointing that out. Let's see, what else do we? Is Etsy done? Talked about that. TTWO. TakeTwo. All right, showing great strength. That's the first check. Above all the moving averages, except lately we broke under the 20-day and the 8-day exponential moving average. So now let's zoom in to get a better picture. All right, maybe zoom out a little bit. So we're getting that kind of pennant here. And let me draw this some different way. So maybe that's what you had drawn and you saw today break under that. And maybe that triggered some stops. But hey, what I'm looking at is exactly what I just talked about. Was I want these stocks to drop under some moving averages, under some previous lows, especially if it's on low volume. And look at the volume so far, today. Yes, it pulled back. Yes, it closed under those moving averages. Yes, it was lower than all the previous lows, except for this little part here. But the volume's super light. We did have decent selling volume the previous day. So if I'm already in the stock, I have my stop below this point. So this little move doesn't shake me out. But at this point, I'm not buying this. I'm not selling this short. No real opinion, no real reason to pull the trigger in either direction on this yet. Let's see what Monday brings. If we see another low coming in through here, maybe we try and take out the lows over here at the 165 area. But if the reverse happens and we start breaking to the upside, taking out these lows are a great sign that this can move forward. So right now, I don't have a position. I'm not sure what your position is, but I wouldn't be rushing to get out of this stock. Have your stop loss set. Let that play out how it works with your risk tolerance. But this isn't a flashing red sign, get out, get out, get out yet, to me. Let's see, last one, Chegg, CHGG, I think. Yes. All right, zoom out. Let's get the picture. Obviously, with schools online, Chegg's going to be moving up. Ooh, dipping below the 50-day simple moving average is one of those signs that immediately takes it off the table as a buy order for me. I want something above that 50-day simple moving average. Not looking like a bad short here, actually. So this pattern that you see here is called the head and shoulders. So you can see the left shoulder here rises up, kind of looks like a Batman guy. There's the head, another peak to the right shoulder, and now we're dipping down. And this has kept closing under the 8-day exponential moving average. So when stocks move up over some moving averages, that might be important, but you're really looking for how does the stock close, because that's going to give you the most indication. So this, every time it moved over that moving average, it couldn't hold those prices. It got pushed down, so that closed under. And now we're breaking under the 50-day. Man, there is one more layer, like a base layer here that could provide some support, kind of at the base of the shoulders. So that's 72.50. But again, this goes back to what I was talking about, where some of these winners are starting to give back their gains, and you don't want to be a trader that was boasting 200% profits just to watch it move against you. So have your stop losses set. If this is you and you're in, and you've been in from here, take some profit off the table, book that profit, and once it starts moving back up, you can add back to a stock that gets momentum, but you want to take money off the table when a stock's working against you. Always pay your winners. So I'm going to add this to my watch list as well, but on the short side for me, volume was a little bit light the last couple days. So I don't know. I'm going to think about this more. I'm not going to trade based on something that I talk about for 10 seconds here, but thanks for pointing this out. This was an interesting one. Let's see, Run. Yes, so this was a fan favorite of mine because I ran in college. So not letting your bias control your trades, this might had a little bit of an effect on me. But let's see, this was a great chart to look at. We see, this is, I think it's a solar company. Solar stocks killed it on Friday, made me a ton of money. This was another example of me double buying into a stock that I shouldn't have until it started working for me. This one did work out in my favor. They don't all, obviously, but got lucky with this. But this ran up, let's see, 133% to the top here. We got this pullback as people took profits off this initial pop. That's good. You want to see some pullbacks, create some base, get some new traders, get some new blood in the trade. Move back higher, and then here's when I got interested, because I missed this entire move up. You're going to miss some. But I started getting interested as it started trading in this tightening pattern here. And then when it broke over the highs of these two green candles, that's when I bought in on this candle. But I did buy in with too much. So again, take that into consideration. But we see a red candle, but more so sideways movement. Red candle, still relatively sideways movement. I was still up on this trade. You see the volume on these two red candles lightening up, less than the green, the buying candle. And then on Thursday, we got a little bit of run, broke over the highs. So at this point, I'm like, all right, here we go. I should have been punished for making that mistake. I'm not going to be, I don't think. And then today, just crushed it. Set of higher highs, higher lows, closed at the high of the day, had another consistent volume day. I did take a little bit of my position off here just to book those gains. If we see a pullback and then a break through that point again, I can always add that back on. But I want to be taking risk off as quickly as I can and keep the profit that I earned. So that's Run. Man, we're gonna go for about 6 more minutes, but I do want to talk about some positions that I'm looking to enter going in next week. Actually, there's one more comment. So Brent, oh, you've been great on StockTwits. Got to get to your stock. Wayfair, good to point this out. I was looking at this one as well. So Wayfair's been absolutely crushing it. I've been trading it on the upside, taking some profits as it touches the upper Bollinger Band. Completely missed this run, and this was a beautiful volatility contraction pattern in here, keeping that wave pattern near the highs, volume, lowering. I completely missed this trade. Absolutely should have hit it because this jumped up 44%. That kills me to say, but admitting your mistakes and feeling that pain is good because you're going to become a better trader by acknowledging that. So that's something I missed. So now I'm just watching this for a pullback. At this point, it didn't really set up for any more breakouts. It's just kind of been moving up over this 8-day exponential moving average, holding a support. And then we did get a sell on Thursday under that 8-day, pop back up to close right at that support level, but selling volume ticked up. So I'm like, ooh, this might be one to pull back if we see any market instability on Friday. And even though markets were hot today, we saw weakness, and that's a red flag to me. If a stock that has been so strong is showing weakness when the rest of the market's showing strength, it's probably time to book some profits there. So this moved down, again, another day of higher volume, closed at the low of the day, under the 20-day simple moving average, under the 8-day, with some gaps in this chart until we get back to a base or the 50-day simple moving average. If you're long this, I'm probably going to start trimming some exposure. If you started shorting, that's great. If you have not traded this yet, give this a little bit of time. Maybe we see a bounce up to the 8-day exponential moving average to test that, and then you get a better selling point if you're trying to sell on the way down. If you're buying, you're definitely not buying on the way down. You're waiting for it to pivot and move up, make some newer highs. But yeah, something that caught my eye today, some weakness in what was a really, really strong mover so far this year. All right, so I think that's all the comments. Let me just run really quick, wrap this up in the hour. So Morgan Stanley, something that has not broken out yet. I had my buy order all week this week, didn't hit it, but you see we're over the 200-day moving average. We're over the 50, we're over the 20, and we're over the 8. Every type of trader is now interested in going long here. So now I'm interested in going long too. I want to stack this deck in my favor. Trading is just working probabilities in your favor. No one knows if the stock's gonna go up. No one knows if the stock's going down. But if you have a system that you only scale up into winners, you can move your stop losses up. You're booking gains and you're looking for smart, safe setups. That's when you get the edge. So here we go. We see a run up, pull back, another run up, pull back, another run up, pull back, but each pullback's getting lighter, 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 volume getting tighter, tighter, tighter. And man, I had my buy order at 53.55 today. It did not get triggered, but the second it does, this is going to pop. This was very similar setup to Coca Cola that I bought into this week. So this is one that was below the 200-day moving average, but now that we're starting to pick it up, this could really be a runner because we're getting that pullback, lesser pullback, volume tightening up, breakout over that diagonal that I drew to get a better entry point. So I did buy yesterday, Thursday, went down. So I was a little bit at a loss, 0.5%, something like that. But because I bought on the diagonal, it bought me a better percentage, or a safer entry for my stop loss. Today it pops up on volume. Look, buying volume's increasing. This could keep going. So that contraction pattern is exactly what I'm looking for. Another one of those was where is it? Or not exactly that type of pattern, but roll. I'll just run through these super quick. Roll, we get a run up here, consolidation, broke over on Wednesday. That's when I bought, sold back on Thursday, had a small red day on Friday. I'm still holding, have my stops under this point, but you could still buy on the next breakout after here because it should have some room to go. Let's go apps. This is something that I did say I would talk about. So I had this as a short today. I did not take the short position, but I was looking at this as a short because we have this huge gap in the chart here, has been a monster winner, huge selling volumes, and then pull back to test that 8-day exponential moving average, broke over it, triggered some buy orders, pulled right back down, closed at the low of the day. Another day that broke under the 20-day simple moving average. Look at all this selling volume. This shows people are getting out. So I'm starting to look to create a short position. And this had run up, or no, so I had my sell order at the low of the previous day. So if we get below here, I'm like, here we go. I'm gonna hit this sell, gonna go short this, gonna try and look for a gap down here. And this is why you wait until the stock starts moving in your favor to put on a position. Thank God I did not put on this short position because it did not make those lows. It did not confirm what I was thinking and immediately started working up. It's up 5.5%. It was up like 8% today, and kind of tricky that it hit exactly that 8-day exponential moving average and pulled down. So I'm not going anywhere on the stock. I'm going to keep this on my watch list for Monday, but if we can get another break over and close over the 8-day, maybe this pops back up again. But if we start moving below these lows, then it's going to be a great short. And one more ADSK, that is a trade that I took. Autodesk here. So really tricky kind of setup. We get that double pop up here, which is exactly what you're looking for. Contraction with volume lightening up the entire way. So I'm thinking this is great, but this had earnings this week. I don't trade into earnings. I wait and react to earnings. So earnings was this weird long candle on both ends. So what happened was it started at the low. It started at the 8-day exponential moving average, pulled down, and just so happened to break below both the 50 and the 20-day simple moving average just before it popped back up. So all that is it's taking out your stop losses for people that have them exactly at those moving averages. That's why it's so important to keep your stops below those points. Yeah, you want to keep them close. You want to keep them at a reasonable distance for your risk tolerance, but put them below any moving averages. Pops back up, and now I'm watching this because this is showing strength. It took out those lows. I'm thinking there's a ton of volume, and the volume's in this buying, actually, not the selling coming down here. It's the buying. So now I'm thinking, okay, we're already at the top pattern. We have some volatility contraction. This is going to pop up. So I did buy. I had a diagonal on here. Bought at some point today. I forget exactly the point. Maybe it was the high of the previous day. Yep, that's what it was. So the high of the previous day also coincided with the highs of a couple of the days over here. So that was my buy order. It just hit my buy order and pulled back a little bit. So maybe I'm the fool that's buying at the top here. But because I waited for it to kind of consolidate here, I still think this is a fine trade to take. But now that I'm looking at this, the volume on the green day today, yeah, I might cut this position on Monday if it doesn't immediately start working for me. Yeah, this one's a tricky one. I'm long till 27.80. Yeah, if you're in a 245, let's see. Yeah, I mean, I'm right there with you. So I have my stop right now under the low of this day, like around here, I think. Well, I guess it expired when the day was over, but definitely have a stop under here just to make sure I don't get stopped out right below these moving averages. But we'll see. Again, I just have a starting position on here. I'm not going to be adding to trades unless they're winners going from now on. So that is, I think that's what I'll leave it off as. I do have other stocks that I'll be looking at, and And I'll post that in the description below, the stocks that I didn't get today. So you can check those out. Let me jump back to the main camera here. How do I do that? All right, so that's all the technical analysis for the day. This lasted a lot longer than I expected. I thought this would be around 30 minutes, but we'll see. If you comment below if you like more of a 30-minute, more of an hour. Because this is going to be taped and then uploaded afterwards, I'll be timestamping all of the stocks that we talk about at those points so you can take a look at exactly what interests you. So maybe I will keep this at an hour just so we can go through as many stocks as you guys would like. Yeah, but with that said, please leave a like on the video if you enjoyed or learned anything. It really helps YouTube just get the video out to more people. This is a channel I just started this year, trying to grow it, trying to help a lot of the new traders out there not make the same mistakes that I made. I've been trading for 5 or 6 years now. I made all the mistakes in the book. So take it from me, learn from me. Dollars that I've already lost, pay your tuition of the market. So please leave a like, comment below any stocks that you want me to take a look at. I'll comment below my opinion on those. Let's see. If you enjoyed this video enough to share it, please do it. Any traders that you can get it out to, the more the better. That'd be great. Follow me on Stock Twits. I'm Stock Tricks with Nick on there. And then on Twitter, I'm Stock Trick Nick. Both of those links are in the description below. And make sure you subscribe. I'll be doing these videos every Friday at 7 p.m. along with, I will be starting up some more personal finance videos, credit scores, how to take advantage of credit cards, any personal finance topics that might interest you or someone else that's not interested in the stock market but needs to take control of their personal finance. Those videos will be starting on Tuesdays starting next month. So trying to cover all the bases here. And I think that's it. If you want to open up a Webull account, you'll get 2 free stocks valued from $12 to, I think it's like $1,200. If you deposit $100, description below for that. Same with E-Trade, description below if you want to make your chart look exactly like I have mine. And with that being said, have a great weekend. Get away from the screen a little bit. Enjoy your weekend and come back ready and prepared to go for Monday. Take care.